The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.
Everybody wants to know what's going to happen regarding interest rates. What's your forecast for mortgage rates? How do you think that's going to affect the local market? I'm throwing a bunch of stuff out here. And also, if inflation continues to stay around 2% and the Fed drops interest rates, how's that going to affect bank lending? So what's the crystal ball looking like?
If someone knows this, I'm impressed.
What's that?
I said, if someone knows this directly, I'm impressed. So I'll speak first, if you guys don't mind. Initially everybody thought rates were just going to plummet and rates were going to go back to around the 5% quickly. That has slowed down drastically just because inflation hasn't dropped to where I think we need it to. I do think rates will continue to tick down.
You're talking about mortgage rate?
Mortgage rates, I think treasuries, I think you're going to see that tick down. And I think as rates come down, so banks, credit unions are sitting on long-term mortgage rates, probably an average of, I'll guess at 4%. So you need rates to almost get into the fives for people to say it's worth moving. Because you're sitting on all these low interest mortgage rates and it's hard to move from your home when you're at a 3, 2, 4% rate and you're looking at 7. So for mortgages to move, I think you need to get into that 1% range where you say, okay, it's worth my time. But you said to the inflation at 2%. I don't think lending has slowed down drastically. I think what happens is people that are on the fence, they wait to see if that's going to happen. And I think once it comes down to a more manageable number, I think you'll see businesses going out and lending much more.
It's interesting if you look at the rates earlier in the year, about April to August or so, we started to see mortgage rates fall. And about 8 weeks ago, we see the Fed lower the interest rates by 50 basis points, and then they followed up with another 25 basis points, and they're promising perhaps another 25 basis points in December. During that period of time where the Fed dropped the rate 75 basis points, mortgage rates actually went up about 75 basis points. So there's a lot of uncertainty that exists in 2024. If you look at what the target rate was for 2025, it was 3%. The Fed now has raised that up 100 basis points to 4%. So there's just so much uncertainty that exists in the market that it's hard to have that crystal ball to say what's going to happen. Certainly inflation being lowered is going to help create some stability in home prices. I think that the inventory of homes are going to also increase or has increased a bit. That's also going to help buyers of property. The interest rate is just one component of the overall cost of ownership. And so I think when you add those other items in, you're likely to see a better 2025 than you saw in 2024.
I think you also have to consider when you're talking about the mortgage rates, there was another economic analysis that we just looked at. Home prices also have to come down for the optimal period for mortgages and homes to take off would be home prices have to come down about 10%, and about the same time that they have to come down 10%, the rates have to come down around 1.5 to be in that 5-point range, and income has to be about stable. Those are the optimal conditions that economists are now predicting that will then help spur the market. So it's interest rates plus the other components. FHA just had an article in the Wall Street Journal about mortgages. They've increased about 7%, which is ironic that they've been able to increase 7%. And then the last study that came out just in October showed that there's a 2% increase in applications for the mortgage market. So you are seeing little upticks in an improvement as those rates have come down slightly with the fluctuation in the high rate, low rate. But there are also some more optimal conditions to help really get the market back to a better point.
On the business arena, anyway, as far as business lending goes, many of my clients, they were excited about, frankly, the election, the downturn in rates so far, that a lot of them had put projects on hold, waiting to see what administration would be in power. A lot of the Trump-era tax cuts from 16 were set to expire, have been winding down, and then that had caused a lot of people to wait and see. So at least the forecast from many of my clients next year, projects are back on the front burner again that maybe had been shelved this year to wait and see. both for interest rates as well as some potential tax breaks as well. So I anticipate a good year in 25 for business lending anyway, from what we've seen so far.
The Business Journal Roundtable Series is sponsored by Advanced Technology Partners.